It's Thursday, 27th of November, 2025. Welcome back to your news update on Blip Brief, crisp, but almost everything updated every weekday.
So we have to kick off with the markets. Yesterday was a really decisive move upwards,
A huge day. Indian equities surged, what, over 1%?
over 1%, and that's pushing them very, very close to their all-time record highs. But this wasn't just a local story. It was a clear reaction to what's happening globally.
Absolutely. To get the why here, you really have to look west to the U.S. The catalyst was that softer than expected retail sales data.
Right. And for the market, bad news on the economy can be good news for policy.
Exactly. It just fuels that expectation that the U.S. Fed finally has the cover it needs to, well, cut interest rates.
And this isn't just hope anymore. The market is now pricing in an 84.9% chance of a rate cut in December. That's a huge conviction level.
A massive signal. And that kind of conviction, it just sends a risk-on wave everywhere.
It does. It helped Wall Street stretch its rally to a fourth straight day just before Thanksgiving. And, a big part of that was the continued strength in AI stocks, Microsoft, NVIDIA, all of them.
So that sets the global stage. But the domestic picture here in India is really what's pouring fuel on the fire. The inflation data we got yesterday was, frankly, historic.
Historic is the word. We saw the Consumer Price Index, the
Yeah,
CPI.
yeah.
It dropped to a provisional low of just 0.25% year-on-year for October.
0.25. I mean, to put that in perspective for everyone, that is the lowest inflation reading India has seen since 2013.
It's an incredible number.
So when you see something like near zero inflation, the immediate question is, why? Is this a sign that demand has just collapsed, or is it more about, food and energy prices coming down? What's your take on what this means for the RBI?
It's a great question because 2013 was a very different time, a lot of global anxiety. I think today it's more about supply chains getting efficient and tight monetary policy actually working. But whatever the driver, this number, it creates a massive consensus shift,
It gives the Reserve Bank of India a green light.
a definitive green light to pivot policy decisively towards supporting growth.
So we are officially past the hoarding rates conversation, and now we're talking about cuts.
Precisely. The market is now, I'd say, strongly anticipating a 25 basis point reduction in the repo rate at the next policy review in December.
And that's crucial. That means relief on borrowing costs for, well, everything. Corporate loans, housing. It just injects momentum.
And the long-term outlook seems to be baking this in. We saw that revision from the Fitch unit, BMI. They've raised India's GDP forecast for fiscal 26 by half a percentage point.
Lifting it to 6.5%. So analysts are seeing these tailwinds as, durable.
Exactly. And just before we move on from the market, we should probably touch on a couple of specifics. There was a major block deal in Bharti Airtel.
Right. The promoter entity sold off a 0.56% stake.
Yeah, that kind of move often signals some sort of strategic realignment, can create a bit of short-term noise.
And on the other side of the coin, a strong debut for Excelsoft Technologies. It listed at a premium of, 12.5% to its issue price?
A pretty decent start.
Yeah.
Shows there's still appetite.
Okay, so let's shift gears. Let's go from monetary mechanics to strategic industrial policy, because this is where India is really making big bets on its future.
It is. We're seeing major moves both from the government and private players to de-risk these critical high-tech sectors, largely, from dependency on China.
And that strategy is crystal clear in the cabinet's latest approval. They've okayed a massive scheme, 7,280 crore rupees for rare earth permanent magnets, REPMs. Why are these so critical?
Because REPMs are, they're the invisible engines of the future. They're these super powerful magnetic materials you need for high-efficiency motors in EVs, in advanced defense systems, robotics, wind turbines.
It works.
Everything. The problem is, China right now controls something like 90% of the global processing for these materials. India might have the minerals in the ground, but turning them into these high-value magnets, that capability is what's missing.
So this huge scheme is basically a drive for, call it technological independence, building out that processing capability right here to secure our own supply chains.
That's it exactly. The long-term play, of course, you can't undo a 90% dominance overnight, but the capital commitment is there. The intent is clear.
And this strategic push, it's not just physical stuff, it's happening in the digital world too, and aggressively. We saw that huge announcement from the Reliance Brookfield Digital Realty joint venture.
Digital connection. Yeah, this is a phenomenal number. They're committing $11 billion to set up a 1 gigawatt data center cluster in Visakhapatnam by 2030.
1 gigawatt. I mean, just think about that scale. That is foundational infrastructure.
It is. And the fascinating question here is this just for India's own exploding digital demand? Or is this an explicit pitch to pull global cloud giants and big companies away from, say, Singapore and position India as a new regional data hub?
We're seeing that same kind of upstream focus in green energy as well. Tata Power is in talks to set up a 10-gigawatt facility for ingots and wafers in Odisha. For people who don't follow the solar value chain, why is that specific part, ingots and wafers, so important?
Because it's the very first, most essential input material for solar panels. Right now, a lot of Indian solar manufacturers import these raw wafers, often from China, and then they just assemble them into panels here.
So this is about controlling the source material.
Exactly. By building a 10-gigawatt facility, Tata is moving upstream to control a critical step. It reduces that import reliance, makes India's whole renewable energy plan more resilient.
Okay, so we've covered capital, we've covered hardware. But we can't talk about structural change without talking about the big one, the new labor codes. This is hitting every single major company.
Yes, and this really raises an important question about the trade-offs that come with reform. The big change, the core of it, is that the statutory wage component has to be at least 50% of an employee's total pay package.
50%, that's a hard floor. And since a lot of companies structure salaries with a lower basic wage to minimize other costs, this forces a complete and immediate payroll rethink. What's the financial hit?
The main impact is going to be higher compliance costs for companies. When that statutory wage goes up, things like provident fund and gratuity contributions, they go up too. So in effect, we're broadening the Social Security net, which is a good thing long term, but...
But it puts immediate pressure on profits, on margins.
Right. And the real challenge for companies now is how do they restructure pay packages without cutting an employee's take-home salary? Because that would cause huge discontent. It's a very tricky balancing act.
And shifting to corporate strategy, you can see companies are already reacting to these changing realities on the ground. Take Starbucks India.
A great example, they are completely overhauling their business model here. Their joint venture partner, Tata Consumer, basically said that any new investment would depend on them agreeing to a more competitive, lower-cost format.
So the premium coffee shop model just isn't scaling fast enough?
Not for a market like India. It means smaller stores, more accessible prices, focusing on high-traffic spots. It's an admission that to win in India, you need volume, not just premium exclusivity.
And on the trade front, there's a new risk popping up for Indian exporters, this time from Mexico.
Yes, auto and pharma manufacturers have raised the alarm with the government. Mexico is planning to more than double tariffs on countries that it doesn't have a free trade deal with.
And Mexico is a big market for both of those sectors.
A substantial market. If that tariff hike happens, it could seriously hurt their competitiveness and force them to, quickly find other markets or other supply chains.
All right, let's pivot to the global stage. There were a few geopolitical flashpoints in the last 24 hours. Starting with India and China, some friction, but in a very unusual place. Not the border, but Shanghai airport.
This was a serious incident. It really shows how China is using sort of bureaucratic tools to push its territorial claims. India lodged a strong démarche, which is a formal, high-level diplomatic protest, after an Indian citizen from Arunachal Pradesh was detained for almost 18 hours.
And the reason for the detention was the real issue, wasn't it?
That was the provocation. Chinese officials apparently refused to recognize his Indian passport, claiming Arunachal Pradesh is Xiangnan, or Chinese territory. It's turning a border dispute into a personal harassment tactic. India's response was, as you'd expect, immediate and forceful.
Shifting to the U.S., a very concerning security incident near the White House.
Yes, a targeted shooting where 2 National Guard members were critically injured. The suspect has been identified as an Afghan national. Federal investigators are treating it as a potential act of international terrorism.
And the immediate response.
President Trump ordered 500 additional National Guard troops to be deployed to D.C. It just shows you the level of alarm there.
Meanwhile, the financial pressure campaign against Russia seems to be entering a new stage.
It is. The EU is about to unveil a legal proposal to finally start using Russia's frozen central bank assets. The plan isn't to seize them outright, but to use the profits. We're talking an estimated 140 billion euros to finance a massive loan for Ukraine.
So they're moving from just freezing the money to actively using it against Russia.
Exactly. It's a big, legally complex step.
In the oil markets, prices were pretty steady after hitting a one-month low. What's holding them in place?
It's a bit of a tug of war. On one hand, you have the assessment that there's an oversupply of crude, which pushes prices down. But on the other, you have these ongoing, delicate talks about a potential Russia-Ukraine peace deal.
And that uncertainty provides a floor for the price.
Right. The prospect of any kind of deal just adds a layer of unpredictability.
And finally, a truly devastating story out of Asia, a high-rise fire in Hong Kong's Tai Po district.
A profound tragedy. The death toll has reached 44, and sadly, 279 people are still reported as missing. Authorities have arrested 3 men on suspicion of negligence, which it points to a possible failure of safety protocols, a terrible reminder of the risks in these dense urban areas.
Okay, to wrap up this deep dive, we always like to look at a scientific breakthrough, and today it's a huge one, a massive step forward for treating type 1 diabetes.
This is genuinely transformative research coming out of Stanford. They've managed to successfully cure or prevent type 1 diabetes in mice, and they did it using a really novel combination procedure.
What's the procedure?
It combines a blood stem cell transplant with an islet cell transplant.
So it's like a complete immune system overhaul. How does it work? I mean, how does that stop a chronic autoimmune disease in its tracks?
Well, the genius of it is that it creates what they're calling a hybrid immune system. You see, in type 1 diabetes, your own immune system attacks your insulin-producing cells. By transplanting these new blood stem cells, the researchers essentially reprogram the immune system.
So the new system learns to accept the new insulin cells.
It recognizes the transplanted islet cells as self instead of as an invader. It just stops the attack.
And if the attack stops, you don't need insulin injections anymore.
Not only that, but you also wouldn't need the heavy immunosuppressant drugs that transplant patients usually need, which have their own serious side effects. It's a fundamental reset of the body's response. It could genuinely move type 1 diabetes from a condition you manage to one you can actually cure.
An absolutely vital step toward medical freedom for millions of people globally. A great insight to close on, reminding you that innovation continues across all sectors.
Indeed, it underpins the structural growth we discussed earlier.
And just before you go, a quick note, this deep dive commentary was put together using advanced AI. We always strive for accuracy, but please do cross-verify any crucial information yourself. Your informed decisions are what matter most.